Good morning, everybody. This is the Market Institution Live Trading Room. Today's October 11, 2023. Uh, we will be starting shortly. While I'm posting now the prep screen out here that we will be using during our live stream as we prepare our pre-market and get ready for the live trading day. Okay, so take a note of this. Get your line set. There are some new levels that we have posted today, so make sure that you get everything set. Recognize we just came out with the PPI number at 8:30. We still have a Atlanta Fed business at 10 and FOMC minutes a little bit later. Okay, so I will start promptly right at 9 a.m. Eastern, but I wanted to make sure you had the prep screen up and had some information for that. Okay. Good morning, everybody. We'll get started right at the top of the hour. I have posted a link for our Discord room, so if you're watching the videos or rewatching this on YouTube, you can go out and click on that Discord link, and you'll have access to our trading community. For those that already have access, please look lower for the announcements. There have been some announcements from the TMI team that were posted this morning, important announcements as we're doing our transition. And also the bottom tab where we have our pre-market information that I posted in there as well, so you can get your levels and zones and everything else posted. Okay. We'll be starting right at the top of the hour, 10 minutes. Okay. Good morning, everybody. We'll get started here in just a few minutes. Just getting my coffee warmed up here. Looks like the indexes are going to try to push the current Globex high. So I don't have any breakouts on the NASDAQ or the S&P or on the Dow, but the Russell does have enough touches of the resistance area to take a breakout to the upside. Okay. I was planning on a breakout to the downside, but that's not what's happening right at the moment. So reduce your time frame, look at the Russell. We'll check that one first when we get started. And of course, we need to adjust the crude oil. We'll be looking for that one at the start as open range breakout trade on that one. Okay. All right, back in about 5 minutes. We'll get hopping and popping. Okay. Wow, midweek already. Yeah, I'm trying to wait for that bell to go off before I start. And they're off. Good morning, everybody. Welcome to the marketinstitution.com and our live trading room as we're getting started. Okay. Information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in the presentation does not imply a suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees of this presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, or any trading strategy. We are using real-time market data. We'll be executing trades in a simulated account during our presentations. No offer on our part with respect to the sale or purchase of any securities is intended or implied. Nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results, and we make no promises, guarantees, or warranties suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. All right, so today's October 11, 2023. Let's check the news. And I'm going to bring up the news website here that I frequent and kind of look around at the headlines, okay? Now, as we bring up the news, the things that we're looking for is not to dive into every article, okay? What we're looking for is where are they steering the herd, okay? Dividend stocks are dirt cheap and may be time to back up the truck, okay? Yeah, well, the markets are really at a high point. Okay, so dividend stocks, we might be looking at the equity indexes and also some exchange traded funds around that area to see if there's any buying or selling activity. What we're looking for in the news is basically divide your paper into two columns and just say, okay, what's positive and what's negative. Okay. Now, is this a positive? Dividend stocks are dirt cheap and maybe time to buy or back up the truck. How does that make you feel? Bullish or bearish? Okay. Now, if it makes you feel bullish, okay, that's what the media is doing to control the crowd, the herd. Okay. Most people don't take enough time to go in and read all the articles. Okay. We're not going to either. Okay. We're just kind of looking to see what the novice traders are looking at to make a decision for the trading day. Remember, the market institution is looking for where the banks and institutions have leftover unfilled orders, okay? And we're looking for those accumulation of orders by looking at a very specific footprint on the price chart, okay? Steer clear of these stocks where the economy is in trouble, okay? Paul Tudor Jones issues a warning, most challenging geopolitical environment I've ever seen. Emerging markets, stocks look cheap, especially relative to the U.S. is a time to buy. Now, the stocks may look cheap, but if the stocks were matched up to what the dollar is actually trading at, they're way expensive, okay? One of the things we need to watch for, Israel hammers neighborhoods in Gaza as war claims another 2,100 lives on both sides. One of the big things about oil is that if Israel does start attacking Iran up there, okay, we have a large amount of oil production up there. That's when we'll start to see some of the action taking place. Oil prices edge lower as investors gauge Israel Gaza war for its supply threat. Okay, so some of the initial reaction is not being played out just yet. Okay, so we'll watch that and keep an eye on the news. So, as one of our trades that we set up in the morning session, okay, is the crude oil open range breakout trade. I have the 6 a.m. marked, and we're going to take that first 5-minute candle formed after or as the pit session opens. Okay, so we have futures traded on the crude oil that trade in the overnight session. The pit, the actual crude oil, okay, starts trading at 9 a.m. Eastern time. Okay, so we take that first 5-minute candle and we look for the break above for an open range breakout to the upside, okay, or a break below for the open range breakout to the downside. TradeStation has eliminated day trade margin rates on all energy products. Okay, now those alerts that you're getting, okay, that doesn't mean trade those more because that's going to attract all the attention. Okay, what we want to watch for here is, what is that if there's less trading, because a lot of us rely on using margin, the day trade margin. What would encourage price to be very radical in moving is a lack of traders being there to support price, okay? If they take away the margin rates for the day, and that's just one broker, there may be others that follow, okay? They're expecting some additional volatility. With that additional volatility, they want to protect themselves. The brokers will always protect themselves before anybody else, okay? If they have eliminated the use or the ability to trade the day trade rate, that is going to reduce the amount of volume quite a bit for those trades, okay? Increasing volatility. So just keep that in mind as we hey, Alpha Intelligence, did you YouTube purposely give us a gray screen with the rewind? Yeah, I don't know about that. The team can answer that question. I'm not seeing that on mine. So thanks for the question. Yeah, let's the team can address that one. All right. So as the pre-market is unfolding, let's take a look at the S&P. I just need to adjust that Globex range. So what we're looking for now, using the information on the price chart, we can recognize that the S&P futures are inside, today's action so far is inside the prior session's range. Okay? Inside days have a more choppy environment, choppy element to them. Okay? Right now we are currently inside the prior session's range. Inside days are a little more difficult, and we refrain from taking breakout trades because they often fail during inside days. We also note that if price stays inside the range for the next 20 minutes, that it will be an inside day at the open, and the gap will often fill on an inside day. So the prior session's close is the settlement price at when we went from the day session to the new session, okay? Basically the end of the day. That's the settlement price. The 5 p.m. Eastern to 6 p.m. Eastern is where that dotted line starts. If price is above that dotted line, S&P futures are gapping up at the moment. And right now we can see S&P futures up 14. So there is a gap between where price is currently trading to where the settlement price or prior session's close and the gap fill. Very often, price will drop to fill that gap, okay, on an inside day. Very high probability. So what we're looking for now is, do we have an opportunity to take a zone entry, because there's no breakout trade involved. So where would we go short if we are looking to fill the gap, okay? So the information shared on the screen right now is prior sessions high and low and prices inside that range, has not broken. We call that an inside day, which sets the tone for what we expect here at the open, okay? And expecting the gap fill. We also measure the Globex high and low. Today it's about 21.5, 21.75, that range for the Globex, the overnight session. We compared that range to the daily ATR, which is down there about 61.5. If the Globex range is small, it's usually 40% or less than the daily ATR. Now, what happens when that is going on is what we've seen over the last few days, okay? So the last few days, we had a narrow Globex range, long-running trend, narrow Globex range, long-running trend, narrow Globex range, long-running trend, and today also a narrow Globex range. So what we've associated with is that a narrow or small Globex range often leads to longer running and trending market conditions, okay? So as we're setting up our day, we're using some very specific pieces of information to anticipate that with this Globex range being narrow, less than 40% of the daily ATR, we're looking for a trending environment, okay? A trending trades, but not at the open, okay? And we're looking for price to pull back into fill the gap, okay? We realize that the conditions on an inside day, often the better long-running trend trades, okay? Here's another clue as we put the pre-market analysis together, is that we're expecting a trending day, okay? We realize that the opening session is going to be choppy and we're looking for that gap fill, okay? Oh, I had a good point on that. Oh, yeah, sorry. Also, on inside days, we realize on the equity indexes that the trades do not start taking shape or trend into a demand zone or into a supply zone where we have an opportunity to take a trade until later in the session. So I do want to caution everybody that's trading just the equity indexes that when you see the scenario where price is inside the prior day's trading range, often your zone entries or your trades will be a little bit later in the session, often around 10:30 to 11 a.m. Eastern time, okay? Now the higher time frame or direction of this trend has been to the upside, okay? Each of the narrow Globex range, okay? And today would be that fourth time that we had that narrow overnight range, okay? Now coming back to the prep screen for a moment, we have Atlanta Fed business inflation coming out at 10 a.m. and we have FOMC minutes coming out at 2 p.m. We have 4 Fed chairmen speaking throughout the day, okay? One came out already, 4:15 a.m., Another one, 10:15, 12:15, and 4:30. Okay, so a lot of presence around where the Fed coming in. 10-year yield dropped into a demand zone. Let's bring that up and get a good look at that. Okay, we had a higher time frame chart. I dropped out to a 4-hour chart. Okay, we see that price has broken down. It has also come into a leg base group of candles. On the 4-hour chart, prices hit demand, and we're starting to get a bounce back up. Okay, we monitor the 10-year yield because as of recent days, the 10-year has been inverse correlated to the equity indexes, FX markets, bonds, okay, and agriculture. So if this demand zone is a strong demand zone for the Treasury yield, it is going to move back to the upside. That movement back to the upside on the yield is going to cause the indexes to pull back. We're also using the dollar, which is inverse related. The dollar also on a larger time frame has come down and tagged that demand area. Okay, you see the setup, resistance, buy territory zone, and prices bounced off of that. So even though the dollar and the yield are in a downtrend on the small time frames here, okay, they have both been met with some demand. Okay, if they start moving up, then our equity indexes will be moving down. So right now it's just been consolidating the last few hours here. The trend, $TRIN. It's a nice addition on TradingView to have the pre-market trend. Okay, now the pre-market trend is currently about 1.190. If you understand how the trend works, markets descending while the trend is high is an opportunity to look for demand zones. If the trend is low and the markets are ascending, it's a good time to look for supply zones. Okay, trend is low, time to go. Trend is high, time to buy. Right now, we're right in the middle of it with the pre-market trend with an inside day. And we're looking for the gap fill. We also can acknowledge that we have light volume. Pull that back up and come out to I monitor the Dow 30. We can see we have lighter volume in the pre-market. Now, many of the stocks are gapping up. Okay, we've got Salesforce, Mickey D's, Goldman Sachs, Microsoft, Boeing, Amgen. Nice moves to the upside, but on light volume. Okay, we need to track the volume because some of these numbers can look very tempting. Amgen's up $4, but only on 21,000 shares. Looks like the market makers are trying to make a market to find some sellers. Okay, so they're rushed price up. Remember, every gap up or gap down in the pre-market is the floor traders getting ready to set up the trading day. They have to make a market. They have to find the buyers and the sellers. So a gap up is to find sellers. A gap down is to find buyers to make that market so they can do their job and process orders for the banks and the institutions and the companies. Okay? Please keep marking your 50-day moving average and the 200-day moving average on your price charts. Okay? What you need to see is that right now we are between the 50 and the 200, which is also a difficult environment for traders to get any trending action. Okay? Thanks for doing that, Brian. Brian has answered your question, Alpha Intelligence, there for the what you might be seeing on the YouTube. Oh, by the way, there have been some new announcements on the TMI Community Trading Room. Make sure you go out and when you have time and see the new announcements today. There's some really exciting things that are being put in place and coming into play. Announcements coming out, our Community Trading Room, which will be tomorrow and Thursday will be via Zoom. Make sure you have registered so you get that email for the Zoom link. I will also post it here in the Discord room tomorrow. Okay. The other exciting part, on Monday, the live trading room will be held from the Market Institution website directly. Okay. Yes, live session from our website, not from Zoom or YouTube. Okay. So some really exciting things coming out as the TMI team puts things together for us. Okay. So make sure you check the announcements so you're up to date. All right. So quiet day on the equity indexes. S&P inside, and all the rules apply to an inside day on each one of the equity indexes until we break the prior session's low and prior session's high, okay? And we're expecting choppier conditions, a lot of back and forth. Dow, let's adjust that. Dow is also inside the prior day's trading range. Inside days, gaps often fill the same trading day, and if the gap is to fill, price must come down, okay, to meet that area where the last settlement price is. These are characteristics that we've been documenting for many months now, and with that documentation, we're able to use that information in our decision price process and help us to manage risk. We have one more inside day unfilled inside day gap, okay? Price often returns to these gap areas where if we gap up or down inside the prior day's trading range and the gap doesn't fill, and I would say anywhere from 85 to 100% of the time, 85% of the time, we will get that gap fill the same day on an inside day, okay? If it doesn't, it usually fills within 7 to 10 days, okay? Now, that has been the norm. The last few times we've noticed that it has filled in a 4 to 5 day range as well, okay? So even though the indexes are quiet, just going sideways, we're using that information to manage our expectations and look elsewhere for some trade activity. Breakout trades are off the table, and for the equity indexes, if price opens inside the prior day's trading range, we're waiting till about 10:30, 11 o'clock Eastern, not going to trade right at the open, okay, for the opportunity to make a trade on the equity indexes. So having said that, let's move forward, okay? Crude oil, open range breakout to the upside, nice little move there, okay? I'm reluctant to trade this at the moment because I'm just still putting some pieces together on the crude oil. Notice the large time frame. Basically, we have support and resistance and prices stabilize, okay? Now, when we have resistance and support, and inside that range, where all the orders have been filled, this whole range becomes what we refer to as dead space. One of the best opportunities we have is when price forms a fresh accumulation of orders below the support or above the resistance, and then price enters that dead space again. We can look to stay in the trade for a nice move, okay? But trying to play this choppy sideways stuff, that it can be a little more difficult. Wait for price to go outside the range, form a fresh accumulation of orders, and then come back in. Supply zones and demand zones inside the dead space often get broken. Natural gas coming back down. So natural gas, I was expecting a nice move to the downside. It has now started to do that. One of the reasons I was expecting natural gas to have a move to the downside was just looking at past behavior on here and noticing the number of days between we started making peaks and then the drop. So over the next few days, looking for nat gas to come back down to 2.948, back down to that buy territory, which we have marked down here. From there, another new high. Now, as we look at nat gas, there was some articles coming out talking about, well, nat gas should recover. Well, look where it's at now. Okay? Very long stability price. We're just kind of playing that channel at the bottom. There's a lot of upside potential coming back in should they have to go back and start filling the reserves, okay, and get that production going. There's going to be a lot more upside. Over the next 2 days, today we have crude oil reports coming out. Ms. Chris, I don't know if you posted in the general chat. I didn't go back up and look at that. Okay. But we look on the nat gas. We have a nat gas report coming out 10:30 tomorrow. I'll do the holidays. It's all tomorrow. Okay, thank you, Chris. Yeah, since Columbus Day. Okay, so nat gas and crude oil report come out tomorrow. Okay, so be watching in the Discord room for any updates on the EIA and what's the other one, Chris? EIA and EPI report. Okay. All right. Now let's come over here. Gold. Gold has had a nice move outside of that daily zone. Okay. Price is approaching a large time frame daily chart where we have the that dead space. Okay. Remember, supply zones and demand zones inside the dead space do not often work. Okay. As price on a small time frame is starting to work its way into that dead space, and with the wars and things like that that are going on around the planet right now, we should anticipate that once price gets into that dead space, that we're looking for price to get to the other side, okay? Which is quite a substantial move back up. I use a smaller time frame. I have a zone here, and let's go back down to small time frame. We have another area right here. As price is building fresh accumulations of orders, we want to keep documenting that, okay? So here we have resistance. Price broke out of resistance. Sellers came in, and we built a fresh accumulation of buy orders. Yeah. I would encourage everybody to start drawing, and you can get a really good snapshot of this. I will be presenting the Mastering the Charts review and recap session about an hour after I complete this session. And one of the things I want to cover today is looking at the structures inside of the buy territories, okay? Why did this speed bump over here have little impact where price went right through it, okay? Versus other ones where we had a greater impact. I also want to point out that fresh accumulation of orders are building as we see the daily chart. There's more and more buyers coming in, and they're trying to build a position for potentially a big move up on gold, okay? So do your research, make sure every trade you get into, you can manage the risk based on your own trading plan. Okay, now, yep, there it was. That was the breakout. Hopefully some of you got that breakout on nat gas. I'm just going to color the screen. We had Swiss franc, got the, dang it, I didn't set up all these trades. Oh. All right, so a little frustrated. I had the beautiful trade set up, and I didn't get into everything. Just got carried away with some other things that I'm doing. Okay, so let's color the background. So this one is already underway. One of the important things about documenting this information, okay, is the more times you see it work, the more confident you become. As you heard me, I missed a trade. Well, look, if you're missing trades, at least you're seeing the setups, okay? You're starting to see the way that price is moving and using that information on the price chart, okay? Acknowledge that you called a good trade, okay? Acknowledge that your setups work. Canadian dollar, Aussie dollar are both set for breakouts to the upside, okay? Aussie dollar broke above, came back below because of the speed bump over on the left-hand side. Canadian dollar, also at a point. Now, in order for the FX markets to go up, we're going to have to see that the yield and the dollar go down, okay? So we're going to be relying on some of those odds enhancers. Crude oil is back in demand, okay, or actually support now. Fourth time it's hit that support. And the area in between, what we've also talked about here is that dead space, okay? The more that price consolidates in this range, I also want to point out that 78% of the time, support or resistance areas hold, okay? We get a bounce off of that. If price starts to bounce back up into that dead space, often it goes to the other side. A perfect setup that I could visualize would again be in having where we have a fresh accumulation of orders below support or a fresh accumulation of orders above that resistance and price coming back into those zones, okay? That's what I would like to see. Right now, I don't have that setup unless I go to a really small time frame. And we can see that crude is just bouncing back and forth at the moment, okay? All right. So, nat gas is already triggered. These were posted in the Discord room, and I want to make sure everybody sees where those are posted. So back to the Discord room as we all get more comfortable using it. Oh, Matt, thank you for posting some stocks. Matt's been doing great in posting stocks for trade setups. Has a fantastic trade plan that he follows for himself and his own trading. So we have some stocks that are there. Got Snap and Nike, okay? Looking for those opportunities, okay? Now, the pre-market prep is posted here each morning about an hour before I start this session. I try to get it done, okay? So you'll see some updates in the trading tips of the day as I add to the notes and things to monitor. But I want to get the levels out to you. Economic reports and some of the stuff that's in the news. And then I post these trades. As you can see right now, comparing the nat gas, we had that one set up, Swiss franc set up. Okay, so these are all posted in the Discord room under pre-market prep, and I'll continue to do that, okay, as we go forward. Okay, and you can see we added some more notes here. So a lot of things coming out to support you all, especially for some of you earlier risers and people that are, some good educational trading ideas. 10-year note, okay. Monitor that over here. Okay. The yield is still moving up, so let's watch the 10-year. I'm going to come back and set that trade up. I got the 10-year set up. We had our resistance, price broke, we made a higher low. Okay. Now, near the open, and pending economic reports and FOMC meetings today, okay, we could see a little volatility. When we have made a higher low before price takes out the sellers, keep in mind that the whole range right here, as we use this, we are looking for any leg base group of candles in the upper 2/3. Okay, so let me exploit that. The upper 2/3 is going to be this whole range. Okay. Now, very often, the zone is closer to the breakout point. Okay. But there is also a few other places that I could recognize as we turn the time frame down. We look for a leg base group of candles. In all these areas, they're still in the upper 2/3, okay? So we have a small range. Drop this down, see if I can make it smaller because the yield keeps moving up. So I think we're going to drop a little bit further into this range. So dropping down to a smaller time frame, capturing that leg base group of candles. Let's see this. See if I can refine these ones. 18. There we go. Okay, so we'll watch these two levels. Always important to manage your risk. By using the leg base group of candles, okay, we can see where and what our risk is on a trade, okay? So I'm going to take a first shot at this. We're trading a 10-year note, TYZ23. And looks like 107, 25. And we'll place our stop loss at 21. For that initial trade. Now, why am I trading these? Well, we already established that the equity indexes are inside day. Inside days, choppy, designed to take your money, okay? Breakout trades are often elevated risk, okay? We didn't have a breakout trade on the NASDAQ, okay? But price is moving up. Dow, no breakout trade, we're still inside day. Russell back up to the Globex high, but also still an inside day. Until we break the prior session's high or low, breakout trades are off the table. We're looking for zone entries. Now, this is a great opportunity that the NASDAQ has moved up. Since price opened inside the prior day's trading range, we are looking for that gap fill. That means we're still looking for price to come back down. Since the indexes are inside the prior day's trading range, we are also looking to trade the equity indexes a little bit later in the session, not right at the beginning. It's just too volatile with the lighter volume. Let's take a moment and assess the cash value. Using the Dow 30 stocks, we have 8 Dow stocks that are greater than 94 cents positive and 2 that are negative, or 3. Okay, so if we take 8 minus 3, that's 5. Cash equals, we multiply the 5 by 2, but cash equals positive 10. S&P futures are trading at 13. Okay, so basically they're balanced. When we look for discrepancies, we want to see that futures are above cash going into supply zone or below the cash going into a demand zone. And often right around the session open, we look for that opportunity for cash and futures to balance out. Okay, so we do have a trade set up on the 10-year Missed opportunity on nat gas and Swiss franc. Euro is still holding out. There is another breakout trade available, but there's a trap on top of it. Okay. We do have our 3 touches of resistance. Okay. Price breaking out to the upside on the euro, where we could have that happen later on in the session with the FOMC minutes coming out. Okay. Important to look and see where's your profit margin potential. Okay. By identifying more supply zones up above, okay, we can see taking a breakout trade here may be short-lived as it goes right into the sellers. Okay. Make sure you do all your due diligence. Okay. Now, this is what I've been waiting for. I'm going to set up a couple of trades here. Platinum has come back down to test that demand zone again, and it's also, I kind of missed that one. And some days are like that. You're going to miss a few trades. Especially when you're doing the live presentation, getting everything organized. All right, we got silver also looking to pull back for those that trade the metals. Okay, I would say silver is one of those bigger products I shy away from because it does pay out nicely when it pays out, but it does incur a lot of risk on the trade as well. For bean oil, I want to draw your attention to a larger time frame. We're in a larger time frame area where we're expecting a bounce. This is not a zone. Okay? See, if it was a zone, then to the left I would have my 3 touches of resistance and I'd have a buy territory below. My buy territory is not till we get much lower. This area where traders may see a rally-based rally, this zone is in the wrong place for a long-term trade. Okay, so how do we splice into this? Well, dropping back down to the smaller time frame, we're looking for the same characteristics where we have a resistance. Okay, I recognize that this area on a larger time frame is a leg-based group of candles and a place we could look for an opportunity to see change in direction. As we grab our resistance area, I want to take note that the breakout trade on bean oil at 53.62. Where is it going? Well, looking up. Grab your support area, minimum 3 touches. I'll be covering this step-by-step process. If you want to visit us in the next section, which is an hour after this live trading room, which is called our Mastering the Charts Review and Recap. Now, this will be probably the last time you get to sample it for this week. Next week, everything is starting to go back to normal. As we discussed in the Mastering the Charts Review and Recap, how important it was to map out the structure inside of this. The structure gives us some clues as to where to look for our high-quality supply zones in a sell territory. When we make that higher high, often the leg-based group of candles is in the upper 2/3. This is all documented and verified. So we look for our leg-based group of candles in the upper 2/3, not right at the breakout where you have wick over wick and little things like that, okay? So profit potential on bean oil, should we get the breakout trade, 53.62, there's not much in the way till we get back up to the sellers. That was one of the candidates I'll be watching. I'm not going to tie up my capital just yet. Still looking for other opportunities. Let's go back to the equity indexes for a moment. Are you starting to see why we use the inside day? And we've managed expectations this morning. Only one of the equity indexes has had a substantial move, and that was the NASDAQ. We're still waiting for the gap fill. We understand those gap fills happen later in the session, okay? And we understand that inside days are choppy, volatile, difficult trading environment. And if you choose to trade those small time frames right now, you have to grab your money quickly. Okay? Don't stay too long or you just end up getting stopped out. So what I hope you have observed, and we'll reiterate this in the Mastering the Charts review of the live trading room and the recap session, okay, is that the information on the price chart this morning, an hour before, actually a few hours before, as we put these pieces together, we understood the trading environment and what to expect. Okay, that is huge, very huge. Now we're expecting a trending day because the Globex session was low. But with the information collected, we know that that trending or price dropping into a demand zone or going into a supply zone, that trend may not be able to, where we can enter the trade, may not manifest until a little bit later in the session. Okay? So great. I'm just, I guess, impressed by my own analysis because I like showing charts like this and I like to see that it works. Okay? I like you to see that it works. I want to thank, hey Matt, I think I might, do you want to post some, other than in the Discord community room, maybe we can post a couple of other ones. I'll talk to you about that later. But I do want to point out, Matt has done exceptionally well in using the methodology and approach. Okay, here we have MET, MetLife. Great. Look at the support, sell territory, making a lower high, location of the zone is in the right place. And look at that, price gapped right up into that area this morning, right where the sellers are left over, okay? Often when we make that lower high, the zone is in the right location here, okay? And if stopped out, you could wait for a confirmation entry and take it back out to the opposing demand, okay? So MET, Snap, also another great setup. Look at the resistance area where sellers kept coming in. Down below, find a leg base group of candles. And Nike, okay? As far as Nike, we have our resistance, our buy territory. Price made a lower low before the breakout, so our zone will be down a little bit smaller in time frame. Okay. Excellent job. Appreciate you posting in there. See, more value add is when students are using that Discord room. Now, let's set up the Russell. Russell is now outside the prior day's trading range. And NASDAQ break outside. Let me double check. Nope. Yeah, by a tick. Okay. Now, on the Russell, we are also expecting that gap fill today. Often if price gaps up or down inside the range, we're looking for the gap fill. I have 1806, 1811. Okay, so I'm going to place a trade to take the trade short, 1806. Okay. Let me stick with I'm going to change this to some micros. take a couple of micros. I'll use 3, 1806. Okay, and stop loss is going to be up there at 1811.5. All right. Now we're still expecting the gap fill, but in order to execute on that trade, price needs to come up to the sellers. Now, it is possible that price comes back down to the buyers before going up to the sellers. We are expecting a trending market condition today where we'll have some great opportunities for making some longer term trades, but not till about a little later in the session. We're 10 minutes away from the economic report. Let's come back out. 10 a.m. Atlanta Fed business inflation. And then the market may get kind of quiet and choppy until the FOMC minutes are released. Okay. And again, our candidates that we had, we posted earlier. Okay. All right, so let's come back out. What else do we have setting up? We also use the BKX, the bank index, and we use the one-day volatility index as some additional odds enhancers. As long as the one-day volatility index is below the moving average, it's more bullish conditions for the market. Okay. The BKX above the moving average, more bullish conditions. Now the BKX is a bank index that was purchased purchased by the NASDAQ exchange, as they use this as a way to help them manage risk. What they're looking at is, they don't want to fight the banks. If the banks are money coming into the banks, okay, the markets are more bullish. Money going out, bearish. The premise behind that is don't fight the banks, just follow the banks, okay? Now with the equity index futures, and why I like trading futures, okay, as a preferred product, is that futures always follow something, they never lead, okay? All right, so S&P moving back down, and NASDAQ still looking for that gap fill. Dow and Russell coming back down. Okay. Now Russell has broken outside the prior session's range, so now I can execute breakout trades for that. Okay. So on the breakout trade scenario here, let's just drop this down to a smaller time frame so I can see the detail. Is we have multiple touches down here where buyers were supporting price. Okay. So the breakout trade becomes when price takes out those buyers. Now the only index I can take the breakout trade on is the Russell at the moment, because it's broken outside the prior day's trading range. Okay. So I want to look for that opportunity, and I want to recognize that there is no speed bumps below that Globex low. It's a pocket of points. So you may be saying, well, what's a pocket of points mean? Well, a pocket of points, okay, is a light volume, big move in price. And these are almost like gaps, okay? They tend to fill, okay? So a break of that 1786, 1787 area, dropping down to a demand zone, 1771, this is where I'd look to go long again. A perfect world, price breaks out, drops into demand, and then rallies back out. Another scenario, price comes up to supply, I add on to my position at the breakout, and then I use the profit target going forward. I want to be able to visualize the right side of the chart. I want to visualize what my action will be if I start to participate in that trade. Okay. I know sometimes when we start off these sessions, we don't know that it's going to be a difficult trading environment or a slower one without the information that we're collecting. Okay. I want you to see that we're exercising some patience, okay, in taking trades at the moment. You also might see that I'm teaching a little bit more than trading. This always happens when we're an inside day. Okay? Inside days are a little more difficult trading environment. And if I'm teaching, maybe that's distracting you from pushing the button. All right, let's drop out to the tick chart. Okay, I'm going to clean up this area. We had an example on crude oil, okay, where we had resistance and support. So a very similar picture, okay. Notice how we made a topping pattern, okay. And in between resistance and support, we have that dead space. And the dead space is the only place we can take breakout trades, okay. But since the higher time frame charts, we are still inside the prior day's trading range. I'm backing away from taking breakout trades on the S&P. I guess one of the things that you could see right now is that one of the reasons I teach and trade and do it live in front is because that's what's necessary for me to stick to my rules, okay, is being around other people to hold me accountable. Okay. Now, the gap fill, and even though I want to trade just like everybody else, I've got to wait. Okay, so price coming back down to the through the dead space. We're still looking for the gap fill. Just above this resistance area, you can see we had that fresh accumulation of sell tickets in the overnight and Globex session. Okay. Now, price is still looking to come back down to this support area as it travels through the dead space. So a nice little example here about using that dead space and how to manage expectations. But if the higher time frame or the session is still inside the prior session's range, inside day, taking breakout trades, you're just going to get stuck in some of that volatility, often stay in too long, and donating to the market. So understand your trading environment. All right, NASDAQ. I'm just going to clean off the whole chart here. Drawing, remove. Okay. Now we got a nice resistance up here. We got multiple touches of resistance. Down below, we have a nice support area. Multiple touch where we had buyers stepping in. We identify where the gap fill is at. We realize that the NASDAQ did break outside the prior session's range by just a tick or so, okay, a couple of ticks. So we can take breakout trades inside the dead space on the NASDAQ as we anticipate that gap fill. Gap fill down at 15,281. In order to get into that trade, I need 3 touches of support. We had, as I open this up a little bit more. Boy, this is hard to be disciplined today. All right, so we do, on the smaller time frame inside of this range, we have started to develop a small sell territory. It's not confirmed sell territory until price breaks. As we use rules to help us trade and manage, or help us manage risk. In order to take that breakout trade, I want to make sure that I have a leg-based group of candles, whereas I can manage my risk on this trade. Okay, so I use that leg-based group of candles. If price does break down, then this will be an opportunity to take a supply and demand trade. Okay, price breaking down, moving away from that zone greater than 2 to 1 would then make that zone fresh and active. Okay, so as we start to watch this one unfold on the NQ, I'm going to set the trade up to take a trade at the breakout, 15,314. Okay, we just had economic report released. Let me get that set up before it moves. 15,314 half.
Order filled.
Taking the trade short. Stop loss, 343. Got to have your stop loss in place, even if it's a little further away. Okay. Now, as we use the rules in the Mastering the Charts course, okay, we're still looking for that gap fill, 15,281, okay? But in order for this supply zone to become active, we are looking for a 2 to 1 move away. 2 to 1 move away, okay? So as price moves down into this area below that 15,298, once that price gets that low, now that supply zone is fresh and active, and we can use that again once price returns to that area. See, at marketinstitution.com here, we are looking for different places we can enter the trade. In order to have a supply or demand trade, okay, we must see price break a support or resistance, taking out the buyers or sellers. Okay, we must have a sell territory. With that sell territory, then we look for the supply zones within that based off of the structure, and we made a lower high before price broke out. Okay. Now that doesn't mean that we're going to have a successful trade and profit from it. It just means we have a method and a plan. Now I'm taking the trade short. We expect a gap fill, which very often happens on an inside day. Okay? That gap fill is down at 15,281. We also have support, and we have dead space in between. We take breakout trades in the dead space in the direction as price coming down to support or going back up to resistance. See, we're mapping these things out, okay? And we're visualizing what is the action I would take. Now, recognizing that supply zone inside this dead space, I'm not looking to short it when it comes up, but if I go long, that will be a profit target, okay? Remember, supply zones and demand zones inside the dead space often fail, okay? So that supply zone I expect to fail. I have a higher probability chance that price is going to come down to fill the gap than that supply zone working, okay? Anybody participate in that? It gave you plenty of time. Beautiful. All right. Let's make sure that we have everything supporting us. Inside days, you want to take profits a little more quickly. Looking at the 10-year, started going sideways. Dollar dropped back down into demand. Okay. So there's still, with the dollar dropping, there's still some bullish tendencies in the market, but we're also noticing that the treasuries were moving up. So a little conflict there. Now, you associate that with the inside day. Okay, choppier conditions. Everybody's still trying to figure out where things are going. Let's come back out and look at some of our other trades. We had the 10-year we're still waiting on. What a miss on natural gas. Euro is now popping up into that supply. Okay, let's bring up the euro. So the tricky part about the FX markets today is paying close attention to the yield and the dollar. Dollar goes down, euro goes up. Okay. Take the time and break down, verify for yourself where your entry can be on the euro. Now I'm just going to bring this one up. I'm not looking to take the trade short just yet. I want price to travel inside that sell territory because of the position of the dollar and the treasury yield. And then I'll look for price coming back out of that area for my short. So we got the euro just about, I'll have an alert for that. Canadian dollar and Aussie dollar are on deck for a breakout. Then I'll look for some short-term profits on that. Look at that nice pocket of points. Supply zone up here is a target. That supply zone is located inside the dead space. If you're new to us and just checking things out right now, you can see that we have some very specific rules and criteria around taking trades and understanding market conditions. Okay, now you can tighten this up a little bit right here. So this is Canadian dollar, CDZ23, December contract. Looking to take the breakout above 765. Okay, actually I'm going to put a bracket on that. I'm not going to look for a lot. I'm going to look for an initial pop into that because of what we might see on the FOMC minutes. Okay, if there's another rate cut, and for the most part, not rate cut, but rate increase, that's going to send the dollar back up and also the treasury yields back up with all the equity indexes and stuff going back down. Okay, so I want to have a bracket order on here where I have my entry, and I'm going to look for a profit potential about 842. And then I'll manage my risk. Okay. So I'm looking to take a trade to the upside as price is breaking out on the Canadian dollar. Aussie dollar pretty much in the same area. Now, this will be something we do cover today. Okay. Notice I had my resistance. I had 3 touches where the sellers came in, and then there was this little speed bump area. Okay, we got that speed bump area. Price popped out, got the breakout, sucked everybody into the trade, and then dropped back down. Excellent. When we recognize the speed bump over here, we always want to see that speed bump is tested. Okay? Once the speed bump is tested, price pops in, we got that little speed bump area, pops into that speed bump, pulls back, okay? that same resistance level to take the breakout trade is still active, okay? Now, the reason I'm doing this is that you could still stay in that trade because we did have a leg base group of candles down below right here. Taking breakout trades, your stop loss would be much lower, 0.6402. Okay. What we got going on the NQ over here? NQ still bouncing around. Haven't been stopped out, but it has been pretty volatile. Did we expect this volatility here on an inside day? Yeah. Okay. Now, same scenario. We got the breakout, right? Do you see over to the left, do you see that speed bump? You see the speed bump was tested. So to add on to this position, I'm going to add another 2 contracts. If price breaks at 314, half. Why are we still going to the downside? Market looks like it's moving up, right? Well, we're still expecting the gap fill. Okay. This supply zone is not a supply zone we can use, okay, because it's inside the dead space. Even though it has that basic picture, if you're standing too close to the tree, you won't see the forest, okay? Yeah, choppy, S&P hasn't gone anywhere. Ooh, Russell coming up. Do we have that set up to take the trade short? No, I have it. Okay, so Russell, almost to the gap fill. And I would be looking to take the Russell short as it breaks this support area, okay? Now, what this starts to look like is we have this strong move up. We got this little Bart Simpson haircut thing going across the top, and then I'm looking for this move back down. Okay, rally, base, drop. Okay, we're now getting the gap fill on the Russell. Again, the pre-market information gave us the direction to trade, and right now we're filling that gap. I'm going to look to take the breakout, 1787. As it breaks that session low. And with the pocket of points, a breakdown below that area should be a nice, strong move. No obstacles, no speed bumps in this one, okay? All right, we're about ready to add on.
Order filled.
And we have 4 contracts. And I need to make sure my stop loss is in place to protect capital. We're still expecting that gap fill. I hope you're seeing the methodic way that we are putting things together here, okay? Speed bump test, okay? Same scenario, speed bump test. And what we'll look to do is take that trade going long if it comes back above that area, just like the inverse that we're seeing on the NASDAQ. Okay, very methodic approach. I'm just going to document this one because it's important that you take some notes on this. Let's see what the market conditions today, okay, were choppy, designed to take your money. They were all inside days, okay? Now it's time to be patient and let your trades work out. I'm going to come back over and look. I have another screen over here. I'm watching the yield. And on a 30-minute chart, the yield is still showing a little bit more bullish, which should help the indexes go lower. Dollar also showing a bullish green candle coming out of that. Okay? We're right at the quarter hour as well. Often we see momentum kick in around the quarter hours between 8 a.m. and 11 a.m. Eastern Time when the banks and institutions are most actively engaged. My initial target is looking for that gap fill. If we get a sudden drop, excellent, down at support, that'll be my next target. All right, Miss Chris, you're in it. Excellent. You've been doing the happy dance for the last couple of days. Now let's come back and check out the indexes on a higher time frame. Here we are. Here's coming right down to the gap fill on the S&P. We projected that an hour before the market opened. The direction is filling the gap by using the information on the price chart. NASDAQ, we're still waiting for that gap fill. And we'll need some help from the stocks to do that. Okay. Remember, futures are a derivative and they follow something. If the stocks are not, you can monitor the stocks to get a feel of, whether it's going to happen quickly or not. Okay. Dow, almost to the gap fill. Russell has filled the gap and we're looking to go short below the Globex low because we have a pocket of points. Looking for a pretty decent move on that. Treasury yield still moving up. And we just passed the quarter hour. And we're looking for the bottom of the hour as well. So give me some feedback in the chat room. How you guys doing there on the trades? Are you seeing the methodology, seeing how things are working? Are you managing expectations? Okay. Now nothing's changed over here. It's just that this product is pretty volatile. What makes this product, the NQ, volatile? Well, it is all of these stocks. These 8 stocks account for over 50% of how the NASDAQ moves. That's why we monitor them. Apple, NVIDIA, Tesla, Netflix, Microsoft, Amazon, Meta, and Google are the large market cap weighted stocks on the NQ. They control between 47 and 50% of what the NASDAQ does. So what we can do is watch these stocks. If they're bearish or bullish, okay, that can give us an indication of what we should be expecting on the NQ, okay? Yeah, we're still, that's a work in progress, a process, Stephen. So the question over here is, have you done a probability analysis of breakouts with speed bumps returning to the leg base area? I'm feeling like maybe I can minimize my risk. Yeah, you have to, the reason we study this so much is and document this is to get rid of the FOMO, the fear of missing out. I still struggle with that as well as everybody else, okay? But if you're in a trade on these equity indexes and you're saying, okay, well, we have very high percentage time to fill the gap. I mean, it took us several months before people started to adapt this into their trading. I mean, we documented many, many charts over and over again where price was inside the prior day's trading range and how many times it filled the gap the same day. Okay, now that took several months of documenting. Okay, and now we incorporate it into our pre-market routine. Okay, NASDAQ as well. Things are bouncing around. Okay, I still need help from the stocks. If I don't get any help from the stocks over here, then this trade is, or at least I understand right now, with no help from the stocks, okay, that it's elevated risk. But I still expect the gap fill to happen. Okay. Now, I do, knowing also where the 50 moving average is on the daily chart, okay, that plays a part into why so much chop. Okay. If you are in the NASDAQ and you're not feeling the love from the stocks, and you realize now that you're in the trade that you have to risk all the way up now, actually we could drop it down to that 330 area. Okay, I'm leaving mine alone. I'm going to let this work. I'm still expecting a gap fill. Okay, but you need to realize, what your risk is on the trade. And if that risk is too much and outside your trading plan, then you need to take action quickly. Okay? But don't give up on studying this. We're still expecting that gap fill. Our original stop is still in place. And I do want to point out, I don't make money on every single trade I take. Okay? Inside days, you do need to take your profits quickly. Okay? But you also have to realize that there's some other factors in there that the statistics back up as well. Ooh, oil, thank you. Oil breaking lower. We're inside that gap. This will be a good lesson also that we'll talk about. So when we have that gap over here, okay, notice the big gap. Okay, and we have demand back down at 82.71. Now, inside this gap, look over to the left and find those leg-base group of candles. What you're going to look for is that supply zone, leg-base, the set of candles we use for a supply zone. Which is going to be a green leg candle in, base candles, leg out. Okay? When you have leg-base group of candles inside the zone there, okay? These also act
Order
as...
filled.
Did we get stopped out on an NQ? Nope, we still have it. We just got the Russell breakout. Excellent. Okay, so right now, crude oil is in that zone, okay, on a small time frame. So be careful if you get aggressively shorting. You have to wait till price gets, right now you just have your finger on a button, taking your profits as you see fit. Okay. Okay. Let's come over to a Russell. Russell has filled the gap, and we got the breakout entry. Dow still coming down to fill the gap. NASDAQ as well, sitting through the heat. Still don't see any help from the stocks to go short. Okay. In fact, I might even be incurring a little bit of risk, as a little more risk here. I just realized the conditions, okay, and I've got to navigate, just like the traffic has changed, okay? So I have my risk, I have my emergency brake, my stop loss is in place. We're just waiting for the stocks to catch up and waiting for that gap fill. S&P, really close to the gap fill. Aussie dollar, I haven't set that trade up. ADZ 23. Breakout about 64,480. Ten-year didn't make it into the zone. Crude oil coming into play. Aussie dollar, Canadian dollar, we set up trades. And the euro is using that trap. I want price to go inside that zone a little bit further. And some of our other trades. Yeah, still waiting on wheat. That's going to be a good one. All right, so wheat is a Z contract, WZ23. And I already have my trade out there to go long at 549. Stop loss, 546. You can wait for price to come into the zone, then transition out. Don't start chasing it because this is an area where we could see a small bounce, okay? But wait for your zone to trigger. Internals. The markets are dropping or pulling back to fill the gap, and the trend is going higher. See, that's what we're setting up for. Now, we also talked about inside days that we had to wait till about 10:30, 11 o'clock Eastern for some of the better trades to manifest. And that's exactly what we're doing, okay? So we are currently in the NASDAQ. That's still working, okay? Our stop was in the right place. If you didn't like that wiggle room, you're back in the profit, get out, okay? BKX is below the moving average, showing a little bit more bearish, okay? We do need to see the stocks on the NQ starting to pull back. Looks like they're forming a red candle. That's good for our short trade on the NQ, okay? Russell, underway, in that pocket of points. Anybody take the Russell short? Ronald Newton, thanks for asking. Do the agricultural futures also follow the inside day type rules? I don't have statistics on that, okay? They do follow the 10-year yield and the dollar with a lag, okay? All right, so some of you guys are short the Russell, excellent. NQ, come on, boys, go and fill that gap. All right, now as we're approaching the bottom of the hour, we got about 2 minutes there. And then I'll be wrapping up this session. It goes from 9 a.m. till 10:30 a.m. Eastern. In about an hour, at 11:30 Eastern, I will start the Mastering the Charts recap of the live trading room and review of the Mastering the Charts course, where we'll talk about some of the things that happened during this live trading room today to reinforce. The Mastering the Charts review and recap section, okay, is part of the follow-up we do with the students that have taken the Mastering the Charts course. We do have a Mastering the Charts course coming out at the end of the month. Okay, it's a 3-day course. We'll do Saturday, Sunday, and Monday. We take frequent breaks. All the sessions are recorded. Okay, so you can attend live or you can attend the recordings. Up to you. So, as we wrap up this session, and I'll do a little review. Okay, we're still waiting for the gap fill on the S&P. I anticipate that gap fill before 11 a.m. Eastern time. Okay. Since the S&P is still inside the prior day's trading range, I'm looking for a zone entry, not a breakout trade. There we go, bottom of the hour. And we're starting to see some of the stocks are helping out here. Okay. Still anticipating the gap fill. That's my first target. For the Dow, same thing. Russell, okay. Looking for now price to fill that pocket of points. There's no speed bumps over here. So we're looking for that target, 1771.70. We do have a prep screen zone down there. We'll look to take a long off of that. Okay. If I'm stopped out, I'll look to take a short up at 1806. Okay. We want to monitor as the markets are dropping and filling the gaps. We want to monitor where the trend is at. Trend is high, we look for demand zones. Okay, as the markets are dropping. You can see things have quieted down from the open, and the upticks over downticks are hovering right around the zero line. And we can see that from this session that the declining issues are starting to outweigh the advancing issues as price comes back down to that no trade zone. Okay? All right. And we have trade set up on wheat. We have a trade set up on the 10-year to go long. Aussie dollar, Canadian dollar, both looking for those breakouts. We have those trades set up. And what else do we have? I'm watching bean oil for the breakout and wheat. Corn, a break above 487, and let's go with 488, okay? Or call it 488, okay? With that in mind, I do want to invite everybody to come back into the Discord community trading room tomorrow. We will be looking, you should receive an email if you're registered on the website, on the marketinstitution.com, you will get an email tomorrow with a Zoom link for the Discord community trading room. We do this every Thursday and Friday, where I hang out and we trade as a group, as a bunch of traders helping each other. It is open mic, open charts. It's where we have traders helping traders, okay? So that'll be taking place tomorrow. Watch your emails for that Zoom link tomorrow and Friday. Let's see, and I'll see many of you in about an hour, and the link will be posted in the Discord room, or you have received it in an email already for the review and recap session, okay? Trade safe today. Hopefully you learned a lot from the trading environment and what we look for in these trading environments and how to navigate on days like this so you're not getting chopped up. You need to take time and wait for the trades to come to you, especially on inside days, okay? Have a great rest of the session, and I'll see you guys in about an hour. Have a good day, everybody.